I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.
Hi everyone, I'm Jason Balara and this is the Know Your Why podcast. Today I'm here with Flint Jamison. Flint spent 20 years in aerospace as an engineer and program manager, and now he's finding a path to early retirement through real estate investments. Flint, I'm going to stop there on your bio because I am excited to sort of let you share your story with us. But first of all, I just want to say thank you for coming on the show today. Really appreciate the time. I know as of this recording, we're talking about early for both of us. So
Yes,
definitely appreciate
yes.
you being here.
Thanks for having me.
Yeah, absolutely. Well, why don't you go ahead and kind of just tell us your story, give us your background, kind of a little bit of a story behind the success, and then we'll dive into kind of whatever topics are interesting to us.
Yeah. So as you said, engineer and program manager. I modify aircraft for the military. I run a $120 million program. Consider it monster garage for the military on aircraft. But back in 2018, I got involved into real estate. I did my own residential. I did a duplex. I bird it. It was good. There's a fun story behind it, but I don't know that we'll dive in there. I've done that plenty of times on other podcasts if people want to see it. But I got into syndications immediately after that duplex. I bird it and decided this is not the path to early retirement, or it's not a quick path, and it's an expensive path. It takes a lot of capital to do things by yourself. So switched to syndications. I got into the webinars and taught myself podcast books, and then this year has really been the year that I got started. Really hit the ground running. Last year we kind of had a failure of a 23 unit that we couldn't close on, so we had to back out of that deal. And then I turned around and partnered, and now I'm a capital raiser, oddly enough. Never expected myself as an engineer to turn into a capital raiser, but here I am. It's been a bit fortuitous because I can be a capital raiser remote. It's the acquisitions people really have to be traveling around, talking to brokers, a lot of on-ground due diligence inspections and stuff. So this has allowed me to do my W-2 and do syndications at the same time. But since then, I've done a fund to fund. I'm a fund manager, and now I'm getting into build to rent properties.
Very cool. Yeah, I think that the sort of interesting. I mean, a lot of things there that are kind of relevant. I think it's a lot of my guests have found, okay, I started with some duplex or a quad or something like that, whatever their residential aspect of their investing was, and then they kind of realized that the ability to scale and do more was found in larger deals, syndication type deals.
Yes.
And the point about being a capital raiser being related to having a W-2 is something that have come up before, because I think you're 100% right. If you're doing acquisitions or you're asset managing or things like that, it is very hard to sort of maintain the W-2 job, especially in some instances. You may not have the flexibility at your W-2 job.
Yeah.
Whereas capital raising allows you to kind of do both, right? Because it's more of a I don't know. You don't, like you said, you can be remote. You don't have to be there. You're not sitting down and going to these investors' houses. So, I mean, maybe let's just start there a little bit. How do you manage that that process in terms of your capital raising, your fund management, all of that? How did you kind of move into? Because it doesn't sound like it's been that long. If it's kind of been this year, that's quite a bit that you've done in a year.
Yeah. a little over a year ago, like I said, we tried to do me and some new partners tried to do a 23 unit local to me. I was the boots on the ground. I was doing all the due diligence inspections. The reason we couldn't close on the deal was many factors. We kind of had the perfect storm, but we couldn't raise enough capital. I think if we had enough capital, we could have pulled it off through all the other challenges. So immediately after that, I turned around and got mentorship and, solved my weak spot. And that's where it kind of fell into place. So that was August of 21. By November, I had all my systems set up with my mentorship. I had a website, I had a campaign, email funnel. I had all the right things in place, and I was starting to market myself on social media. And at that point, I had been talking with a very experienced operator for about a year, and they had an opportunity coming up. I asked them if I could join on and do my first raise with them. They said absolutely. They get it. Everybody's been through their first raise. It's one of the most humbling experiences.
It sure is.
We tried to do a raise over the Christmas season, which was exceptionally difficult. I don't think I'll try to repeat that again. But yeah, we weren't able to close until February. And then so that's how it became my first deal. And that was February this year. Awesome. And by March or April, I turned around and got a fund opportunity.
What I understand. So talk a little bit about the fund. Talk about, sort of, you don't have to go into the nuts and bolts of how you form a fund, but
yeah,
why you might, as the GP side, why you might like the fund, and also talk about it from the LP side. Why would you think that is, kind of beneficial to your investors? Why did you go, you went that way, you went that route pretty quickly. I know a lot of people end up with the fund model, but maybe talk about that thought process, because it is interesting. I think, at least in my head, I've not done a fund yet, but in my head, I can imagine why it's good as the GP, but maybe go through some of that, the pros and cons on both sides.
So that's such a great question. And the benefits of being a capital raiser, everybody needs money. Every operator needs money. And a lot of times when they want to scale, they need money. So they'll partner with people like me that can bring some capital. So on this particular one, yeah, we could go down a rabbit hole on funds, blind funds, evergreen funds, fund of funds. This one in particular was a fund of fund. It is a one-off. The primary fund is a portfolio of 3 properties, 750 units total, 2 different states, 3 different cities, 3 different types of business strategies, 2 asset classes, right? It's just kind of, so one $50,000 investment for an investor gets some equity in these 3 different properties, and it's totally diversified because not only the 3 different cities, but it's 3 different business plans. There's a Class A, a brand new Class A off the developer. The other 2 are late 1980s value adds. One's really small. That's like a quick turn 3-year. The other 2 are a 5-year business plan. So you can imagine we're going to have 3 different properties moving at 3 different paces with different cash flow, different upside at the sale. So it's this really, just from an LP perspective, it's a great investment, because if one kind of underperforms, the other 2 can outperform. It's just kind of a best of both worlds.
Yeah. It's from a LP side, it's a diversification play, I think, ultimately, right?
Exactly.
You're looking at, and I know some funds will be fairly specific, right? It's like, we're going to create this fund and it has all, B class value add multifamily or whatever, or all mobile home parks, whatever people want to do. But I think in a lot of funds are with one specific operator, right? The operator might create their own fund, but are these all with the same operator, or are you kind of providing your investors diversification amongst operators as well?
So this is different operators as well. The the primary fund was originally set to be 50 million. Now, by the time we got the 3 properties, it was 32 million. But that primary fund is I would say the primary capital, and KP and lender, they did a lot of that GP side work for the 3 different operators. But to raise ultimately the 32 million, they went out and got some help. They can raise 20 million on their own, but to get the rest, they needed help. So they invited other people like myself, which is why we called it a fund of a fund. Right. So I come in at my fund as a limited partner to the primary fund. And then I have all the investors. So the way it works really is they give us a different pref. They give us a higher preferred return so that we can scrape some off the top. Our limited partners actually get a better return than if they were to invest directly into the primary fund. But there's enough preferred return on the top to pay for our expenses and to pay for ourselves as well, because it turns out it's a lot of work just to manage a fund. So that's kind of the mechanics behind it.
Yeah, I'm sure that the financials reporting, all of that stuff is probably no different than it is, if you're investing primarily, or if you're on the GP side of a primary syndication.
Yep.
And perhaps even more if your fund has, multiple different projects that it's in, you kind of have to sort of keep track of everything that's going into it. We'll talk about a little bit what your, sort of, how do you, when you talk to potential investors, what are you telling them? What's kind of, how do you, I always hate to use the word like sell it or pitch it or whatever, but what's your process in terms of, kind of reaching out to other investors? I know you said all your systems in place and all of that. How do you manage that?
A lot of my own time. You're actually talking to me at a very interesting time in my entrepreneurial endeavors. It's a business, right? I'm engineer program manager. I'm not classically trained salesperson or marketer. I've kind of learned along the way. I've done things that I would say I regret, because I just like, oh, that was a really poorly written email. That was a classic engineering email, and it went out to LPs. But I do LinkedIn. That's really where I spend all my time, because that's all the bandwidth I have. But and now I just, as of 3 days ago, hired a marketing company. So I'm going to expand much beyond that. I'm even talking YouTube ads. Yeah, I don't know where this is going to go. I'm going to let the marketing experts decide, and we'll drill in. But ultimately, from a limited partner, if a passive investor finds me, say on LinkedIn, and they contact me, sign up on my website, my database, ultimately they end up on the phone with me. They ask a lot of questions because most people don't know anything about it. So back to I'm not a classically trained salesperson. The best thing I know how to do is educate, and that's really what everybody wants. So it turns out to be a really great sales tactic.
Yeah.
Because if you can educate, you give them confidence in what we do.
Right. Because I mean, if you're trying to hard sell them, you're probably going to turn a lot of people off, especially people that are not or that are new to the space. They've never invested in real estate before. So you're really, sort of providing that opportunity. And so if you're sort of focused exclusively through LinkedIn, and that's kind of your, as you said, your bandwidth, and it is, I think a lot of people say, when it comes to social media, pick one and kind of really focus on that one before you kind of go on and start adding to it. So it makes total sense. With your, kind of, now you have marketing, what is your outlook? What's your goals? Kind of, what are you trying to do with the expansion of it?
Yeah. So serendipitously, what I've found is, as a capital raiser, partnering with experienced operators, I get to bring my investors a broad portfolio that they can really diversify with. Because I mean, nothing against the operators themselves, because a lot of times they are very specific, and they need to be I buy in Dallas Fort Worth only Class B 1980s vintage value add, blah blah blah. They're experts at that, and that's how they do so well. And I want to partner with those niche experts. But I can partner with, say, the RV park guy, because lo and behold, those numbers are really good. Build to rent, we're going into next, new development. We can talk about that. Like I said, I did the fund to fund because that was something that happened to fall in my lap, and it was a really great opportunity for investors. So I can really diversify the portfolio.
Yeah. Well, that's a great segue there, because I did want to talk about build to rent. I know that's kind of the direction that you're headed. Talk about that a little bit. Talk about, what you like about it, what, sort of why you feel like that is the direction you want to head.
Yeah. So first we'll start off defining what build to rent is. We're literally building a community of starter homes. They're small, 1,000, 1,500 square foot homes. They come with a little, we call it a postage stamp front yard, backyard, but the whole community is built similarly to, I guess, like a Class A apartment building, where you have a property management, you have all the amenities, the pool, we're going to have a pond, a walking trail. So this is a transition from people who want to get out of apartments but still can't afford to buy a house. As everybody knows, what it costs to buy a house is really high these days. The millennials are in their peak family building years, and they really want their own four walls. So the build to rent started, it feels like it only started a few years ago, but it's really starting to take off now. And the big institutions are pumping tons of money into these, which kind of also shows the demand for just the demand. Renters want to rent their own home. It feels like a home for them, not just another apartment. So yeah, and we're providing supply. There's a 3.5 to 4 million housing shortage in the US, and somebody's got to build. So we're building. We're kind of meeting this need in the middle of providing some supply and providing a home for people who want one.
Yeah. Not trying to. I want to sort of play devil's advocate, because I've had some of these questions in my own mind, I guess, about build to rent. There's, of course, everybody wants to talk about their asset class as it's the greatest asset class ever. So
yeah,
they're all good for different reasons. And I always tell people, need to know your investment strategy and really figure out what you believe in. So, but with build to rent, here's my, I from a tenant standpoint, totally understand. It makes sense, right? It's of course you'd rather rent a house than a apartment, because you have your own space, like you said, your own four walls, and you can still have those amenities. From a operator / builder standpoint, it in a way doesn't make exact sense to me, because one, people talk about if I do multifamily, I've got one roof over all of these particular units. Well, so now you're stepping back to, because a lot of people go from, you went from a duplex to now you're doing syndications, and so people will go, and that's one of the things they'll say, right? Oh, now I have one roof over all of these different units. And then the other thing is, from a I guess that's an operator type question. Now, the good thing is these are new right now, right? If you're building it, so you're not going to have the same, repairs and things like that. But the other thing is land. So obviously you're right. We have millions of housing units that we need to fill, but isn't the more efficient way to fill that an apartment building, multifamily, than building? So it's I mean,
Yeah.
again, I'm not trying to be argumentative. I hear people talking about it. You know, everybody, like I said, has their own. This is the best way to go. But what are your thoughts on some of those things? I just
Yeah.
think those are interesting topics to dive into.
No, you're absolutely right. If our goal was to backfill the $3.5 to $4 million, 4 million shortage on homes, it probably is most effective to put them all under one roof in, say, an apartment building. But we know in life that, I mean, there's people building luxury homes mostly because they want them, right? There's a demand. So we're building towards the demand. From a maintenance standpoint, yeah, they're going to be a little harder, but we can demand premium rents beyond Class A level out of these, so it justifies the means. And to be honest, it was in 2021, last year, there was 50 to 75 billion dollars of the institutional money going towards build to rent, and they don't build. All they do is buy from us, the builders. So yeah, the demand's there. The other cool thing let's talk from the investor standpoint. There's new development multifamilies going on too. I've got a lot of friends that are building apartment buildings. The biggest downside from an investor standpoint on those is you have to wait a really long time before you get paid, because you put your money in, you're still cutting dirt, you still have to do the vertical build. You don't get paid until they populate that apartment building and then ultimately sell it. But they can't populate an apartment building until it is 100% complete and the engineer signs off on it. With build to rent, it's kind of fun because yes, you don't get paid until something's built, but we plan on doing what we call 10 to 15 starts a month. We will start building 10 to 15 a month. Subsequently, we will finish 10 to 15 a month. And as soon as that first tranche of houses is done, we're going to start populating. So we could have 10 houses populated while we're building the next 10 to 15 and subsequently thereon. So we get to start cash flowing much sooner than an apartment building does.
Makes sense. It makes sense. Yeah, it's just points to the couple things, like it's hard to go wrong in real estate, right? There's a lot of different opportunities there, and it comes down to, you know, kind of whatever you believe in. And I think, you know, building to the demand makes total sense. You're right. Like people, whether this isn't just with housing, but I mean, whether it makes financial sense or not for them, people kind of want what they want. And so I think sometimes that's probably, to me, the most appealing thing about build to rent is that just as you mentioned, it's that like people don't want to be in an apartment but maybe can't afford to buy the house. So here's my in-between step. I think one thing you didn't touch on that I would think is probably an option is, in terms of exit strategy, you have multiple, in that you could, as you said, you could sell this whole build to rent community to an institutional investor, or you can sell each home off individually and, you know, kind of capitalize that way. So I think all of those points are great that you made. It's just very interesting to me to always hear like why someone chooses to go down whatever, you know, sort of road they're going, because I don't want to have shiny object syndrome, but I like to know kind of what the options are out there. And so I think maybe that points to your fund to fund, in that someone who, as an LP who might have shiny object syndrome, can use that to their advantage and be like, now I can get into all these different things that I think are cool and see how they all perform.
Yep. You're absolutely right. There's so many different options out there. I've seen hotels, hotel conversions to apartments. There's so many different ones, but you're right. I obviously don't want to get into the shiny object syndrome either, because I got to do right by my investors. But I think that there are a lot of unique opportunities within just multifamily alone. Like I could do a new dev apartment building, and barely any different than build to rent.
Right.
I'm actually invested in a bunch of those too. So,
yeah,
as an LP.
It's just, it's true. I mean, diversity, I think, goes a long way in terms of building your portfolio, especially as an LP. I think that's where you can kind of take those chances, and because, as you mentioned, if you're an operator, you want to be dialed in, right? You want to pick your market, maybe a couple of markets, but you don't want to be invested in 25 markets as an operator and trying to build a team in each of those. So it's but as an LP, you can kind of have the best of both worlds. You can get those returns, and you can kind of say, okay, I want to see how all of these different asset classes perform with all of these different operators, and then have that overall portfolio diversity. I think it makes a lot of sense. Well, Flint, let's switch gears a little bit here. I want to get the chance to ask you the questions that I like to ask every guest. The first of which is based on the name of the show being Know Your Why. So what's your why? What drives you towards success?
Yeah, this is such a great question. I originally started out just wanting to have a lot of passive income or secondary streams of income. And then I thought, wow, this could be early retirement. Cool. You got to dig further. Ultimately, what's the driver is I really want to have that financial, geographic, and time freedom so that I can provide a different life for my children. Like, I love to travel. I think it's important to travel and visit other cultures. I've done a lot myself, and then be able to give back. And in order to have the time freedom, in order to do all of that, I gotta have the financial freedom to be able to step away and provide this unique opportunity and ultimately generational wealth. Hopefully my kids can continue on this legacy.
No, that freedom is I mean, it's like the closer you get, the more the more appealing, the more kind of that sort of holy grail situation that you realize it is, just being able to sort of do what you want, when you want, where you want. It is pretty amazing. Tell us something about yourself that isn't common knowledge, a special skill, a hobby, whatever you feel comfortable sharing.
We can just go with the travel topic because I mentioned travel. So I've been to all 7 continents. I actually told my wife I need to travel to all 7 continents before we have kids. So mission accomplished. 7 continents being Antarctica. And as we speak right now, my wife actually has a job in Antarctica, and she is down there for a month. So I've been single parenting for a little while with a 4 and a 6-year-old and having 2 jobs.
That just opens up so many other questions. So I want to know how long did it take you to go to 7 continents? Like, you set that goal, like we just did that in, did you spend some good, meaningful time in each? Like, was it I hope.
That's a great question too. I've been to Africa twice, and I've been to 5 African countries. And we traveled a lot prior to getting married, so we had a lot of them checked off. I think after we got married, we probably needed 3 more continents each. So yeah, and we didn't hit all of them together, oddly enough.
No? Okay.
No.
Well, apparently if your wife has a job in Antarctica, that's amazing. For sure. That's not just a first on the podcast for me. That's a first of anyone I've ever met. So that's very cool. And kudos to you for single parenting. I have a 3-year-old and a 1-year-old, and it's like sometimes a day when my wife's not home is a challenge. So I can imagine the month has been an experience. So good for you. When people hear this and they want to reach out to you, what's the best way to get hold?
Yeah, I think the easiest thing to do is go to my website, vestuscapital.com, VESTUS capital.com. If you want to jam with me on social media, LinkedIn's the place to go, and it's just /Flint Jamison. I post all the time and I engage.
Awesome. Final question for you, Flint, and let's target this towards LPs, but what would you tell someone who's thinking about getting started in real estate, and I'm sure you've probably had these conversations, to sort of set them on the path, to success? What would be your message?
I'm actually, as I mentioned, starting in this new marketing campaign. I'm trying to better assist with that. I'm going to do a whole bunch of very short videos that educates all the main frequently asked questions. So stay tuned for that. If you come to my website, when you listen to this in maybe 3 months, it might be there. But before that, to be honest, if you love podcasts, there's always podcasts to listen to like this one. If you love reading books, The Hands-Off Investor by Brian Burke is probably one of the best. But I think from an LP standpoint, get educated, because you'll have more confidence in being able to choose an operator and someone like, and trust, and be able to give them $50,000 or more to invest in a deal.
Yeah, I think, the education is key. And it sometimes, I think that for LPs, it gets, there's a message of like, you don't have to really do anything. That's but I do think it is to your benefit to get educated, understand what you're investing in. And that may be by having conversations with operators or, fund managers like yourself. Like that may be how you get educated beyond the podcasts and the books and everything. Because then if you don't know someone doing it, now you got to go out and find someone. How do you get to the point of know, like, and trust? And so that's where our marketing campaigns come in, but also like it's on those investors to do their homework and know who they're investing with, what their investment strategy is, what they're trying to get out of it. Because I think that's it's like, people have talked about this on the podcast before, but it's like people say, I want to invest for cash flow. Well, that's great, but if you only invest $50,000, that cash flow is you're not retiring on that, right? So you've got to have, it's not a one-time thing. If you're investing for cash flow, if you're investing for equity gain, sure, you can invest your 50,000, give it time, it's going to grow, and it's probably no different than it's different than the stock market, and I believe better, but the idea is that you're just kind of having this growth over time. So I just think it's a super important point. The education of an investor, even as a passive investor, is really key.
Yep, absolutely.
Awesome. Well, Flint, this has been great. Thank you so much for coming on the show today. I appreciate you getting up this morning and spending some time talking. And anybody who likes this episode, please like, rate, and review. Allows us to reach more listeners. We'll say goodbye here. Thank you, Flint, again.
Yes, thank you, Jason.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.